Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 9th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Right now, the ES maintains an upward bias at the moment. A couple of things to keep in mind here. Here's our key range from before, right here, which kept prices in line. The first test and only test at the key range low was quickly bid back to the midpoint of the range. Soon thereafter, we hit the top of the key range, a retest of the mid, and back through to the 50% extension. The last target, the 100% target, is still above, and that's at 43.43. We're 43 points away from that level as we are currently trading 4,300. 43 is the key number today. So right here, here's your 43 level. We still have to that level. Now, right now, we're stuck in a 5-day range, and the likelihood of remaining within that range heading into the weekend is still pretty good. Even if we do push through highs up here, not expecting or anticipating a full-on continuation. Remember, next week we have inflation data on Tuesday, and then we have the FOMC on Wednesday, Fed interest rate decision and the Fed statement, and that could then lead to quite a bit of volatility beginning Tuesday. Until then, we could continue to see mostly range-bound action here Friday and Monday, heading into Tuesday's pre-market data point there. So again, an upward bias still in play. Even if price were to drop down here, it's still an opportunity to fade it and look to return it up toward 43 up above. Overall, this 5-day developing range here could open up a move up ahead that could be pretty significant in the near term. Right here, you're looking at 142 points if it reaches the 125% target, and that's very doable. As you've seen, it's been able to do that here already a number of times. So we may see another breakout that can get us 120 to 140 points of range up ahead once we see expansion. All right, taking a look here at the NQ. You'll see right here the NQ, one heavy day of selling. Big day down. One of the biggest days the NQ has seen all year. And yet the very next day, fade after trend day, return back to the midpoint and a close beyond the midpoint. And already here today we're seeing early weakness or overnight weakness here be defended. So a check mark trend day up, which could take us higher toward the previous highs. Any early low, and perhaps the low's already in, maybe not. Maybe if we come down here and put in a new low on the day, wherever that low is, look up 200 to 250 points, and that might be the high end of today's range in the best case scenario here. Again, we're still in this range right here with an upward bias and a likely continuation to the 100% target up above of 14,822. 14,822 will complete that big time key range target there, and then you have a shot to continue to the edge, which is 15,250 up above. Failure to hold 14,2 would be open up a wider move, perhaps to the previous month's midpoint at 13,8, but as of right now, expecting this thing to remain mostly range bound with an upward bias. All right, let's take a look here at crude oil. You'll see right here crude oil has been range bound, lacks a whole lot of good directional bias. Instead, high range days at the center of this range, a big high range day in the previous session and closed near the midpoint. So today has a very good odds of finishing the day inside. Inside day could be what we see today. This market has been averaging over the last 10 days quite a bit, 2.98 points, but again, after wide price action the previous session, we could be somewhere around a 2-point range here today. Say 70 to 72 could be today's range inside day as this market continues to trade right at the center of this larger range. At some point here, we may see a good move that takes us to an edge. That means up here near 75 or down here near 67.5. But until then, we could see some chop back and forth before we see that directional move. Let's take a look here at gold next. What you'll see with gold, very similar price action to crude oil, mostly range bound 2000 down to 1970, yeah, or 1940, 1970, the midpoint there. For today here, the idea is to keep an eye on the previous session's high. A rejection here opens up a return to 1970 at the very least, and then you have a shot to maybe go back toward 1960 or the other edge. So right now we are already seeing quite the early rejection at that high. That rejection here happening just at the RTH open, and to reject the previous highs here opens up a return again back to the previous session's midpoint, and failure to hold the mid starts to open up a path to the previous session's low. Lastly, taking a look here at the YM. The YM with an upward bias at the moment. Higher highs, higher lows day over day over the last several days. Still kind of in a narrow range, not quite as narrow and as rectangular as the ES, but still a narrow range nonetheless. You can see right here quantified 5-day narrow, 47% of ADR. The potential here is 1,000 points nearly, 910 here up to 1,100 here. So 900 to 1,100, let's call it 1,000. 1,000 points of range could be seen ahead on a 5-day basis. And that could be easily doable given the fact that in a couple days we get inflation data, then FOMC. So we could be looking at quite a move up ahead that could be at least 1,000 points, if not more, once we get going. Now, which way do we go here? Again, the key level we've continued to watch is the 33.811s. That's the FOMC from last cycle here. That's the May 3rd level. We're about to get another one here in a few days, and we're sitting right at it. So again, that's the key level to watch. Above this level opens up 34.364. Below this level, and we could be back to the 33.315s here. So that's kind of the range here early on. All right, that is it for now. We'll see how this plays out heading into the weekend. Happy Friday, everyone. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.